Kurt Pearson is here, and he's got a topic that he says keeps coming up when people talk to him.
That's right. We're talking about inflation. Will it come back? As Molly said, Kurt Pearson, kind enough to join us this early in the morning. And Kurt, let's just get right to it. Inflation, is it going to come back? And if so, when?
Well, inflation always occurs when there are a big supply of dollars. They're chasing goods and services. And with the government stimulus, with the way that the government has tried to work to really stimulate the economy, it's creating a real surplus of those dollars, which could lead to some fairly significant inflation. Economists are a little bit at odds in determining exactly when and perhaps how much. But everyone is pretty much on board that yes, it probably will start flaring up at some point, maybe 9 to 12 months out.
And you said you've been getting a lot of questions about this. I think inflation is kind of a scary word for some people. Do you think that's why it's been such a topic of conversation?
Well, a lot of us have the memory of the 70s in the back of our mind where we experienced that period of rampant inflation, and many in the country have experienced inflation in other countries where it really becomes a detriment to the economy. So that's kind of where the fear comes from. Basically, what it could mean to all of us, you know, right down on the street is when we go to the grocery store, instead of putting $2 out for a loaf of bread, you know, it could easily go up to $3 or $4. So the dollars buy less, which means that it puts the burden back on all of us to really manage what we are taking in and make sure that we're, you know, living accordingly.
Well, speaking of buying, we see all these commercials all the time about buying gold.
Oh,
but
yeah.
Is this a wise idea? I mean, should we really be buying this?
Well, some asset classes that typically do well during inflationary times are stocks, real estate, and natural resources or hard metals. And so that's where some of these ads kind of get their impetus, you know, to go on and really create some fear. The fear, though, isn't a reason to ever buy anything. It's something that people really need to consider and think about. Does it fit in their portfolio? I encourage people to visit with their advisors to make sure about the issue and not do it over a toll-free line or respond to the ads just out of fear or emotion.
Okay. Kurt, we've got about 30 seconds left. Cash for Clunkers, you think it's a good program or a bad program?
Well, I won't cover the political side of it.
Yeah.
But just one of my concerns with the whole program is if people were basically going to trade automobiles anyway, probably a good idea. You know, they get a little bit of incentive. If you weren't planning on trading automobiles, but this is a way for you to bump up, and what impact is it going to have on your net worth, on your balance sheet? Will you be able to make the payments if you had to borrow money for the car? You know, we're still kind of up in the air in terms of the employment numbers. Could you pay for the car even if you lost your job in the next couple of months? Some of those issues are what gives me cause for concern and how individual families are actually making the decision. So the incentive on the outside looks fairly decent, but when you start taking it down into practicality, how are people making these decisions, and are they showing regard for other pieces of their net worth and of their financial statement?
Okay, a lot of stuff to consider. As always, you can reach Kurt at this address and this phone number, 327-1020. Kurt, thanks so much for coming in.